Good day. This is Brian R. Smith with Christmas Whistler. I'm going to take you through the budget cash flow calculator. This spreadsheet is a very powerful spreadsheet because it really combines kind of the best of two different style of spreadsheets kind of in the financial area, and it really gives you a tremendous amount of analytical power to be able to see what your net cash flow is for your family. On one side, of course, as part of cash flow, your positive cash flow is all the income that's coming into your household. On the negative side, the negative cash flow, are your expenses, your discretionary expenses by various different categories. And this is just a standard budget kind of spreadsheet that you would see and find on the internet in many different places. And then other expenses like your state income tax and federal income taxes, that would be kind of, again, on that negative cash flow side of that. But the difference between that positive cash flow coming in, the money that you can spend, and the negative cash going out is your cash flow. And found this spreadsheet to be very useful in cases where you're thinking about, do you have enough money to be retiring, or do you have enough cash coming into the household for taking on an additional expense, for example, like sending a child to college or medical expenses, or whether you're ready to retire or not, or your income is going to be dramatically changed, or heading into unemployment, to finding out what is your new, what can be your new budget now with a different income for your household. So with this, then, let me just introduce you to the spreadsheet and how it operates. At a very high level, we have the color key down here in the lower right here. The dark green these are places where the strong green, where the user input is requested, and it's changes to those cells. And you can see them kind of highlighted here. Changes to that dark green cells are where it will actually change the effect of the actual calculations that are going on. Light green is still for user input, but it's more for documentary purposes only. It does not affect the calculations. It's just for your notes and just your own, your own notes to yourself. So that's kind of how the spreadsheet works. Of course, there's lots of other calculations that go on. There is a federal tax form calculating. This estimates your federal tax because as your income goes up or as your income goes down, your federal taxes will change. And then that dynamic change is then impacted upon your net cash flow. So you can play then what if in terms of if I have additional income or if I lose a source of income, what's going to happen to my effective net cash flow. There is some federal tax tables. This has already been updated for 2016. As you get into 2017 and beyond, these tables may change. You can update these. I'll keep them up to date myself, but you have the ability in those dark green cells to adjust, the federal tax brackets. So what is the standard deduction, and some of the other values that are needed to be able to calculate, to estimate your federal taxes. And this last tab here is just for lookup purposes for the execution of the program. Back to the main page here, this budget cash flow tab. To run through this, it really is a series of 5 steps. So the fifth step, you're just kind of jumping ahead to that, is the summary. So this gives us a summary of all the different big pieces that are going on in your positive and negative cash flow, and of course the difference between that, which is your net cash flow. We'll get to that last, the step number 5. But step number 1 is all about your household income. And really, we've broken up the household income into 3 different sections. It's a little bit odd way of thinking your household income, but it makes sense when we're talking about cash flow, which is the spendable income that you have. And then with the net income, or the negative cash flow, would be your, part of that would be your taxes. And the more money you make, the more taxes you have to pay. So with that, then, we break up income into these 3 pieces so the budget cash flow program can then calculate your taxes and then also calculate how much cash flow, or cash that you have on hand for the positive cash flow. So the first part of your income is it's kind of your standard good old-fashioned W-2 or your self-employment income. This is all tax and it is spendable. Right? So it's tax goes into your federal tax forms. You pay money on it. The more money you make, the more money you pay, and it is spendable. So after you've paid your taxes, this is a chunk of money that you have in your hand. That'd be part of your positive cash flow. The next section for your household income is income that is taxed but not spendable. Now, there's not a lot of that that's out there, but dividend income on your 1099 div is often in that kind of category. So it's dividends have been reinvested in your stock portfolio. This money is taxed, yet you don't have that dividend money in your pocket to be able to spend it. So it adds to the tax burden that you have, and also too more critically for this program, it does not add to your positive cash flow. Right? So that is a second section of household income. The third section of household income is income that is not taxed yet is spendable. And a good example of that is a gift. A gift from your father that writes you a check, or from a grandmother writes you a check for $100. That $100 goes into your pocket. It's spendable and it's not taxed as long as it's less than $10,000. All right, so those are the three different household incomes, and then those will then work together into your positive cash flow, and of course then also too in terms of any kind of liabilities you have, or liabilities but taxes you have from the federal and then also from the state if you're taxed by the state. All right, step number two then would be your expenses. Now this would be just a standard budget that you would lay out, like any other kind of budget program. Like I said, with this budget cash flow calculator, half of it is your income that's coming in, and the other half is your expenses going out. This is just a standard budget, and I'll take you through this. It's nothing too terribly scary or something that you haven't seen before in terms of a household budget. Just estimate everything that's in there, of course, or give you as good as estimates that you have based upon how much you spent on that at that area last year. Step three then is your state income tax estimator. So this is very crude. It's estimator and all that. There's lots of different states, lots of different laws. So basically, I give you two different ways of calculating it. One is just putting in a sum. Say, I expect to pay this many dollars to the state this year and in the previous year. Then also too as a percentage of the federally taxed amount of money, so that it's more dynamic. As you make more money, or as you make less money, or as you make less money, you'd pay less in state taxes. As you make more money, you'd pay more in state taxes based upon an effective tax rate. The federal tax estimator, I showed you that briefly. This is this tab here. Goes into more detail, and it really throws you into brackets, and it's a very powerful calculation about the federal tax. It is just an estimator. Can make mistakes. It's not going to be perfect, but it's going to get you closer than just guessing at what your effective federal tax rate would be. And then the last thing, of course, then is to review. So what I've done is I've just thrown in, wild numbers into the spreadsheet instead of trying to fill this out dynamically as we're going along. I just threw in some numbers, and so let's just go through there together, section by step and section by section to kind of show you what is all there. So the first section is this is all your income coming in. Like I said, this is step 1A, which is the taxed income and spendable. Any of your W-2 income will be reported, self-employment, if you have pension money coming in, unemployment insurance coming in, if you have rental profits coming in, any interest from a 1099 int coming into your household. These are all the things coming into your household. And you can always add additional income coming into there, and just put in the amount of money. Maybe I have $5,000 worth of work that I do for somebody, and that just comes in and adds to the total amount of net cash that's coming into the house. Of course, all this will be taxed. All right. The next section then is, like I said, the taxed but not spendable. Good example of that would be dividends. There's also, if you have a distribution from a family trust, like a K1 trust, that money is taxed, yet not if you're, taxed, but it's not spendable. And then there could be other incomes that you have there too that you can add into that. The third section is money that comes into the house that is not taxed and spendable. And you can see the examples here, and of course, gifts. And if you take a Roth, it's basically a post-tax distribution from a 401k or a post-tax distribution from an IRA, that would be a tax-free kind of event. Education credits or any kind of other credits, healthcare reimbursement accounts, or any other kind of income that you have there would be not taxed yet spendable, something that would add to your positive cash flow. This is an interesting one here. Is as part of cash flow, you can think of cash flow as being kind of the income that is coming into your household, but you may have a emergency reserve of a pot of money someplace. that you would want to draw from temporarily while you are having negative cash flow. If you're going to draw from that emergency cash reserve, this would be where you would add money into here, which would be additional positive cash flow coming into here. And this I use to manually kind of zero the negative cash flow. And this tells me then how much I'm drawing from my savings in order to make my family work, be in a kind of a break-even level. So that's a one area that you can use to play with kind of what if. And then it's expenses. And so here, as part of this, is just a normal everyday, kind of a budget. You have savings and investments that you can make, including I consider education as part of a saving, or you're actually investing in somebody's future. So those would be part of the expenses that would be kind of be affecting your negative cash flow. And then of course we'll be summing things up. Those costs associated with your home, whether you have a mortgage or rent. Just a little note here is that the mortgage is the pure play amount that you're paying per month for the mortgage, and not including any kind of escrow or property taxes and insurances and things like that. Those are here separately because we do have a calculator that will calculate the approximate amount of interest to be taking out of your mortgage payments, so that then that can be added into the federal deductions, the itemized deductions. And I'll get to that in a little bit. But here's all the other expenses kind of related to the home. You can put those in, again, just estimated, or if you have the actual values from the previous year, fine, just put those in to be more accurate. Transportation costs, you can see there. Daily living costs, and again, if you have others that you can just do, you can just add them in there. In fact, you can even insert lines. Right click and then insert lines. You can add lines and remove lines. Just don't change these daily sums. That's where I pull from there and I push that information into other places in the spreadsheet. Entertainment, you can see those. Health, your premiums and co-pays and medical and kind of gym memberships and health of your pets and any kind of life insurance or other health. And then charities and giving. And the total sum of these, of course, will go into the itemized, possibly if you're going to be itemizing with your federal taxes and all that. And then miscellaneous expenses, union dues, and then you can have other expenses here that are yearly, monthly, or weekly. And just as a reminder, kind of in the right-hand side here, you can add notes about exactly what these expenses are, so you can remember that. So the dark green will affect the calculation. Light green is just for your information only, kind of annotation. Right. So what we've done is we've already done now step one, which is your total income. Step two, which is your expenses, kind of your discretionary expenses, about how you're going to live your life here, and then a calculator, just an estimator for the state income taxes. Now I'll give you two different ways of estimating your state income taxes. One is just as a effective tax rate, as a percentage of this number right here, which is your federal taxable income. So this is your total income, your AGI from the federal form, minus your federal deductions, gives you your federal taxable income. Now, states sometimes you have other things you have to take away from that, or some things that you have to add into that. So this is just an estimator, but it takes this federal taxable income, and then you do like a 5%. This is my effective tax rate. You'd have to go back into your previous tax forms from your state in order to see what your effective tax rate is. And again, this is just an approximation. If you know something that's a little bit more exact than that approximation, you can always just put in a number here. Now this is an OR. This is one of the kind of a little bit different part in this spreadsheet. This is an OR. You do one or the other. You don't do both. And if you do try to do both, you say, okay, well, I really know this is 2,000. You get a little error message here, right, telling you that you have to do one or the other. Then you would change this to be 0%, and then that error message will go away. So it's one or the other. Well, both can be 0. That's not a problem, because many of you, not many, but many of you will have your state will not have any income tax for you. You lucky dogs, you. I live in the state of Minnesota, and so we have lots of income tax. Anyway, so it is just indeed either a percentage or an absolute amount, but not both. And then tell us what your previous year actual taxes is, because that's part of the federal tax form too in your standardized versus itemized deduction calculator. And then federal taxes, you notice this is all gray, which is just for your information. And all this information actually comes from this tab. So this is step 4, is this special federal income tax estimator. It really is a fairly easy form, given that a lot of the other pieces you put in are the raw information that is then drawn forward, like here, that state income tax you see there clearly comes from this state income tax right here, this previous year's state income tax. Because if I change that to 3020, right, then I go over here and it's the 3020. So you can see how your hard work on that first tab really makes this tab quite easy. First thing I'm really asking you is, this is the total amount of mortgage, your total amount of mortgage payment. If I go back to here and get up to mortgage, whole mortgage, your total mortgage payment is this $18,000. And what I'm asking you is kind of your effective, what is the interest, the portion of those mortgage payments that is interest only. Of course, over the life of your mortgage, that will change. And so it's just, kind of an average for this year that you're estimating, what is going to be the percentage of that mortgage payment that is interest. In this case, I just say 70%. And then of that 18,000, then the answer is 12,600 goes towards the mortgage interest. There are many things you can deduct on an itemized in the itemized form for the federal forms. You can always add in other things here that that sometimes, that I don't have in here. You can always add those in. But basically, this takes all the things from the federal form and it comes up with the personal deduction sum. Takes a look to see if that's greater than the federal standard deduction, which is, by the way, drawn right from that federal tax form if that changes. But it pulls that, and if this is greater than the federal standard deduction, then I use the itemized deduction. Otherwise, you get to use the federal standard deduction. It's the same kind of math that the feds use in their tax forms. Get your exemptions, again, for dependents times the exemptions per dependents, and that is, again, on this federal tax form, is the exemptions per person. And then if you have any pre-taxed money that is taken out, that of course reduces your positive cash flow, but for a really good reason. You're saving it for your future. And it also helps you too with your federal tax, because now your federal tax will be that $6,000 or whatever you put into your pre-taxed 401k or IRA. And then it comes up and it calculates your federal taxable income. That's your filing status. I throw that into the tax brackets. And one really interesting thing about these federal tax brackets is I can calculate I call it headroom, that is in your tax bracket. And you can see that calculation right here. And this I found to be outrageously important and powerful for if you need to take a qualified monies out of a 401k or IRA. That is a taxable event. That money is actually tax that's coming in. And if you want to optimize how much money will be taxed at just the 15% before you start taking out dollars that would be taxed at 25%, the answer right here is, according to this estimate and all that, is around $16,000. This would tell me that I could take $16,000 of taxed money out of my 401k or IRA or some other kind of instrument like that, or have an additional $16,000 worth of income, and it would only be taxed at 15%. Every dollar after that would be jump up to 25%. Kind of a big boundary, and one that I like to optimize with and to pay my fair share, to the federal government, but pay only what is necessary. That's one really interesting thing that comes out of this calculation, and I do show that off on the summary in the primary tab. Anyway, add up all the taxes, all the different kinds of taxes from the feds, and that goes back into the bottom here for this federal income taxes, where that total sum is there. Wow! So really, again, very simple. It is just your estimated household income coming in, broken up into 3 different pieces. Your standard budget that you would have for your household, and just more accurate you can have that be in terms of the the actual values that you're spending on mortgages and things like that, gas per month and all that. That's grand, right? Otherwise, it can be just estimates. And then it will calculate for you. This tool will calculate for you kind of an estimated federal income tax, estimated state income tax, and then give us this review. Let's take a look at this the summary here. So the income, this is income broken up into three different ways, so there's nothing too outrageous here. We got the spendable income in these first two sections here, and that gives us I'm sorry, this is all the taxed income. Some of it's not spendable, and that gives us what the AGI is from a federal point of view. There's also some money that is not taxed, but it's spendable. That gives us enough information now to be able to say this is our positive cash flow that is coming into the family. We have this amount of discretionary expenses for this, and this will be including the tuition and mortgage and all the other things that are going out of the household. And like I said, but in addition to your discretionary expenses, you have federal and state taxes. Federal taxes is here, the total as it's pulled up from the bottom and from the federal tax calculation form. And then here's that headroom and the bracket. So I'm saying here is in the 15% tax bracket, here's my headroom that I have left. I explained that before. This is a great way to say, I could have an additional, again, $16,000 worth of income and pay only 15% on every dollar of that income. More than that, then I'm going to start paying 25%. So it's, again, a boundary, and I like to optimize on that. Then your state income taxes, and that gives you a sum total of your negative cash flow, and take positive cash flow minus negative cash flow, and there you are, the net cash flow. So here's a family, just a simulated kind of family with about $12,000 worth of positive cash flow coming into the family. And then you can start doing, what ifs to say, well, what happens if we, if we lose this income, right? And we can see the differences here. Now that 40,000, right, was greater than that, but of course now we're going to be taxed less than that. So that's where the automatic calculation of the federal and state taxes is a very powerful feature with this. So just a demonstration of this. I hope you find it very useful. I'm very interested if you have any problems with it. If you say, oh, here, that's a great thing, but could you add this? Could you add that? Or you didn't quite calculate this correctly in the federal tax forms or the states. Give us more options here or there. So your cards and letters. I really want to find out about how you're using it and how to make it better. So let me know. I am christmaswhistler@gmail.com, so you can let me know there, or wherever you bought this from. You can always, I'm sure, give rate it and give me some positive and or negative feedback. Any problems, I'll fix them, and I want this to be your tool to help you calculate your family's cash flow, positive and negative, and be able to make these really big what if kind of calculations about retirement or additional income coming in, or we're going to lose some income as part of the family, or taking on some additional major expenses and just not knowing where you are in terms of your cash flow. So again, thank you very much and have a great day.